Hey there everyone. So if you've been following along with my channel for a while, then you know I've been calling for a bear market. I've been saying that stocks look like they're set up to go into a bear market. Even though 2019 was a rally year, it was really just a backtest year of the major trend line. Let's look here at the charts. Here's your S&P 500 chart, and I've been pointing this out in almost every video. And so if you've been following along, you've been prepared for this, or expecting it maybe. And here's a monthly chart, so each candle represents 1 month, and you can see that we're in the up. Here's your bull market for the last decade, and we broke that bull market trend line right here back in 2018. We broke it, and then the rest of 2019 we were just trading below the trend line, back below. And then we did a full back test in the last month right here. We did a full back test, and then we basically completely failed and rejected. So this was priced into the charts. Coronavirus was literally just the match that lit the tinderbox, I guess. But the charts were priced to go down because they were priced for perfection. Bullish sentiment was at extreme high. Everybody was long, and when the last long has bought their last share, then there's nobody else left to buy, and you just have sellers take over. And that's exactly what we've seen. So this should continue. We're in a bear market now. This should get, a lot worse. And I think ultimately, again, I've pointed out, here's been my price targets, 211.50 and 187, somewhere right in there. And it's not looking that, we're not that far away at this point. We're about halfway there now. So this actually is not looking that outlandish now. I mean, everybody probably thought it was crazy as we started to move higher in 2019, and anybody that wasn't looking at trend lines, all they saw was just the market moving higher. But if you were looking at trend lines, you noticed that we broke that trend and we were heading down. So that's really what I see. Whether we stop here and hold some support and get some sort of a kickback rally, that's very possible and probable, I would say. But in this video, because we're in a bear market officially now, I want to talk about kind of the larger macro themes, and then we can kind of break down some of these technicals. But for one, the Fed now is basically has to come in and do something. If they do not, then we're probably going to a Great Depression. And this is not really being, I'm not trying to be sensational or anything. I'm just saying that if you think about the 1930s, that was a stock market crash that brought us into a Great Depression. But it's not so much necessarily how much it falls, but oftentimes it's how much it went up prior to that. And this market has been completely pumped up by lots of different factors, but quantitative easing, super low interest rates, creating stock buybacks. Okay, that's one of the major reasons. Additionally, we had a tax cut, fiscal stimulus in 2017 that created more that pumped it up even more. And the stock market's just continued to be pumped up. So we now have the potential to have a massive fall. And so the Fed has to basically, because they've kind of created this beast, if they don't step in and provide some sort of quantitative easing package, probably they're going to call it coronavirus support package or something like that. They're going to try to put the blame on the coronavirus, and this is why they need to do QE, because it's all about the coronavirus. That's probably how they'll message it. But the reality is that it's literally just a credit bubble that they need to keep propped up. And if they don't, then, we're going into a Great Depression. I mean, we're probably, a recession, I think, is pretty much baked into the cake at this point. We're going to have a recession. Markets are going to go lower. But if they don't do QE and probably start it next week, basically, then this could be a depression. So my bet is that they do QE, and we do get that. And, that should, in the short term, stop the bleeding in the market sell-off. It doesn't I don't think it guarantees that this is over. The bear markets don't just end like that. So I think we get some sort of a kickback rally on a Fed stimulus, really sharp reaction, and then we continue the selling. So myself personally, I came into the morning overnight short triple Q's full size position, and that paid off very nicely with the huge gap down today. Again, I've been saying, okay, I've been trading this short several times, but for the most part, I've had a core short position through a big part of this crash, not all of it, but I have held that overnight many times and kind of held on to that. So whether this continues, we'll have to see. I'd like to see how the day action trades out. There is a support right here at this 181, maybe 182, 181, somewhere right in there. We could overshoot it, but there is a support right here. So if we can hold right here, if the day can hold right here, then maybe that's the beginning. Maybe the Fed comes out early and says something, and then we get some sort of a pretty good size rally. Expect the rally to be a pretty good size rally. But I'm going to see that rally as an opportunity to reload back on my shorts. I don't want to be short during the rally. So I'm going to watch it. So huge profit for me in this crash. And this is why shorting can be so profitable. And I've said in a lot of my videos, like, I don't want to be long when the market's trading below trend. Even though it's been grinding higher in 2019, I don't want to be long because I didn't know when this was going to happen. We were back testing, so it could have happened right here, but it didn't. It decided to happen way up here. But I knew that this was most likely going to happen. I just didn't know when, but I knew because we had broken the trend and we're back testing that this was going to be the move. And being long was just not a small amount of reward for huge risk. The risk to the upside, the risk that the market went up a whole lot was not as large as the risk that the market could fall a ton. And that was the correct position and correct action. Again, a lot of people get emotional and they get greedy basically, or they get fearful. And so when markets are ramping up, they want to basically call you out and say you don't know what you're talking about and this and that because you didn't collect the 3 to the 5% more that the stock market went up. But the market from the highs here has dropped. We're down 26%. So that is we're wiping out. We have wiped out pretty much all of 2019's gains in a matter of, weeks basically, and most likely heading lower. So I think we are going to get a bounce soon. I don't know when though. I mean, this could easily run all the way down to this 2010 level. I don't know how big this is going to be. It just has the potential to be big. So just keep that in mind. I don't know where it's going to stop or where it's going to fall, but oftentimes it's going to fall a lot more than people think. So it has the potential to be a huge crash, and I suspect the Fed's going to need to come in. Now, my shorts have been doing really good. However, my gold miners have been getting whacked pretty bad. So let's look at that, and let's just try to evaluate this with a calm mind, because there's a lot of emotions out there right now. People are panicking, and this is what happens when you have major sell-offs. But the charts help me, and just when I have charts pre-planned and set up and I've got my levels defined, it keeps me calm during panicky moments when I have conviction in a trade. And I do have conviction in the gold trade. The reason being is, for one, let's look at the bullion. All right, gold bullion, spot gold, is in a bull market. It's been in a bull market. You have higher lows, higher lows, higher lows, higher lows, and higher highs. Okay, so it's uptrending. And today, you can see we've got support right here on the weekly chart at 1573. That support comes all the way back from here. It's a very strong level of support. And it was a strong level of resistance as well. But we have broke to the upside of that, and so that is now support. And today we're trading at 1571. So this big sell-off in gold, all it did was bring us right down to support. And when you're in a bull market, you buy at support. That's just, trust the trend basically, and you buy at support. So that's exactly what I did today. I bought some more. Here's my AEM, and I pointed this out. I said, look, I really want to get it right down here at 40, 50, 40 bucks, somewhere right in there. That's where I think that would just be a gift. And sure enough, we came right down there today. So I don't know if this is going to hold, but as of right now in this area, this was a good area to buy, and this is where I bought at 40, 50. And here's my, this is a daily trend. So you've got the trend line here. You've got clusters. We fell right down to support, and this is where I expect the buyers to step in. We could easily undercut this a little bit, kind of get a little spook out day, but I still expect this area to hold support, and we start to move higher. So I added in this position. This is a new position I just established, and we're going to go ahead and see how this one plays out. Now, the gold miners have been getting destroyed, so it could get even uglier, but I suspect we're going to hold support, and bullion's in support. This miner was at support. You buy at support. Here's Barrick Gold. Barrick Gold's a little bit different, but here's your support in Barrick Gold that I have marked out at 1587. And so that should hold. So far, we're holding it today. Let's see how that looks over the next few days. We do have this little tiny gap right here that never got filled, and I've pointed this out over and over, saying, look, we have a little gap, and we could easily come down to fill that gap. I think that is the area that would be a great level of support, filling that gap down at this 1450. So maybe we have some more hard selling and we get down there. I'll probably be looking to add some more to my position right there. But I do expect the Fed to come out. They have a meeting next Wednesday, and they should do a press conference, and I expect they're going to do something to try to ease the market. And the market's not going to accept a 25 basis rate cut. That's not going to be enough. 50, maybe that helps, but I think what they need is a 50 or even go to zero. If they go to zero, that would probably help. They need to surprise the market with more stimulus than what the market's expecting, and the market's pretty much expecting a 50 basis point cut. So I think they need to do more, and I think they're going to, and that's because that's the only thing that's going to stop this massive bleed off in the market. So that will help the gold miners, because that basically is letting the market know that the Fed is going to devalue the dollar with more and more stimulus to try to stop this recession or crash, and they're going to come out with massive QE programs. And this is the play. I mean, this is the playbook that I've been calling for the entire time, saying, look, we're going to have a big crash, and then the Fed's going to step in, and they're going to murder the dollar with tons of stimulus. And they're going to, the dollar's going to sell off and gold's going to move higher, and gold miners should benefit from that. So that's been my playbook. So far, we're starting to see kind of act one in this playbook, which is the deflation or the big sell-off. We're seeing that. I suspect the Fed's going to try to step in early with a big program, because this market is so pumped up that if they let it go too long, because there's so much, this bubble's been inflated so much, it can deflate really fast, and that's what we're seeing. That's why we've just seen the biggest. We've gone from a bull market to a bear market the fastest in history, and that's just because there's so much. It's been so pumped up that so the Fed probably realizes they have to step in really fast. They can't wait. They have to get right in front of it as fast as possible with whatever kind of support that they're going to do, and if they don't, then we probably go to a depression in this country. And a depression is, doesn't have to look like the 1930s Great Depression. It could be different, but it just means massive unemployment, 20% unemployment, 25% unemployment, and, just really bad, just a bad economy, basically. I mean, places like Spain they've had unemployment that high in the recent decade. So it's not like it doesn't exist and it could never happen in America. It can easily happen in America again, and I think it will if depending on how this is handled. But regardless, purchasing power will be lost, and it's going to be lost either in real terms or nominal terms. So you're either going to lose it because you're losing dollars and the stock market's crashing, or you're going to lose it because the dollar is losing a ton of value, and so the dollars that you own are losing a lot of value. We'll see which one actually comes to fruition. My bet is it's going to be, the Fed is going to provide stimulus of some big quantitative easing program, and gold is going to go higher. So that's really it. That's what I want everyone to kind of pay attention to. Let's just continue to watch this. One thing also I think that people need to pay attention to is this, is the bond market. The bond market's just been getting destroyed. Let's see. Looks like they're trying to save it a little bit. Let's look at the weekly here. Yeah, big move from the highs. Now it looks like they're trying to hold it. So if they can recover the bond market, that might calm the stock market. This move in the bond market, this straight down move, you don't see these moves except when you're in like market crashes like 2008. I mean, that move is just out of control. It was all the way down here. So lots of buying in bonds today, but let's look at the daily here. Yeah, huge reversal. Lots of buying in bonds. This has got to be the Fed most likely stepping in and just buying bonds. Kind of an indiscriminate buyer. They'll just buy them. So this has got to be the Fed doing that, stopping the market crash. And so maybe the stock market finds some relief from that. So let's go ahead and watch that. But if bonds continue to sell off with this velocity, that's really bad. So again, that's really all I want to point out. I just want you guys to kind of understand the fundamentals behind what's happening technically, and where kind of my macro thesis has come from, and why I have been analyzing things from the short bearish kind of perspective, due to the setup that we have. We had the setup, now we've got the trigger, and now we just need to watch the technicals and the levels and chart the indexes and the stocks that we're trading. But the setup and the fundamentals are all there and all playing out perfectly. So that should continue to work out in our favor, and we just need to trade the technicals now. So thanks for subscribing. Really appreciate it. And give me a thumbs up, leave me a comment. I'll catch you guys down the next one. Bye.